We are facing a real cost of living crisis, with many households struggling to make ends meet. We have a combination of higher inflation, but wages that are struggling to keep up. What is causing this cost of living crisis? Why have things got so badly so quickly? Especially at a time when corporate profitability has increased very significantly. In this video, we will look at factors such as high inflation, rising interest rates, rising electricity and energy prices, the war in the Ukraine, but also longer term factors such as poor productivity, low economic growth, and the inexorable rise in house prices and rents. So what's causing this high inflation of 9% that we're seeing in the UK and elsewhere around the world? Well, we have to go back to COVID time, and of course the COVID lockdowns led to a real shutdown of the economy. Firms cut back on staff, and then in late 2021 the economy reopened, and two things happened. First of all, consumers had a lot of savings they wanted to spend, so there was a big surge in demand. But the second thing is that firms weren't really ready because they'd laid staff off, there was a lack of investment, and also a lot of supply constraints, especially in regard to transport and shipping, with China still in lockdowns. So we had this combination of rising demand but also cost push pressures because firms weren't able to meet the increase in demand, especially in some sectors. Now then, just as the COVID-induced supply constraints were starting to ease in 2022, the Russian invasion of Ukraine in February really exacerbated the problem and caused a new round of cost-push inflation. Because of course wars tend to cause a big rise in oil prices because countries start to stockpile oil. But in the case of the Ukrainian war, we also saw big rises in food prices, and sanctions on Russia led to further falls in oil. So this caused a big increase in oil prices and led to higher petrol prices. And in the UK, the petrol has almost increased by 50 pence in the past few years. That's 50p per litre. So back in January it was about 145 pence. Now we're paying close to 200 pence per litre. And I should also add that this is not just rising oil prices, that firms are also using this inflation as an excuse to increase their profit margins. And that they do this because inflation is easier to disguise increased profit margins. And so back at the start of the year, the average was about 6 pence profit margin per litre. Now that's risen to about 12 pence. So as well as cost push factors, there is what I would call profit push inflation, with firms making higher prices to increase their profits. And since COVID, UK corporate profitability has increased by 34%, with some of the largest gains in the top biggest firms. So although we're facing a cost of living crisis, firms' profit margins are often doing very well, and that shows there is a high market concentration, especially in some industries, which enables firms to take advantage of inflation and put up prices. Now the other side of the coin is low wage growth, and this isn't just a short-term factor. This has been a problem really going back to the financial crisis in 2009. Ever since that Great Recession, the UK and other countries have seen low wage growth. And in the UK, this is strongly related to poor productivity. This is the output per worker. So this has really stagnated in the past couple of decades, which is kind of unprecedented really. And in this period of low productivity, then it's hard to see increase in economic growth, and it's much more difficult to have increases in real wages. And this poor productivity is coming about through a lack of investment, not adopting new technology, and a reluctance of firms to invest in the private sector because their prospects for growth are low. And also there's some demographic pressures like the aging population, but I won't go into that now. I did make another video on that recently. So anyway, we've got this low productivity, low growth and low wage rise. And although some unions have started going on strike, generally speaking, workers don't have the power and bargaining influence that they did, say, back in the 1970s. So when we get inflation of 9%, many workers are unable to get wage increases which meet the rising inflation. And so if you look at recent years, real wage growth has been very patchy, and the recent trend has been for a fall in real wage growth. Other factors contributing to the cost of living crisis include, in the case of the UK and to some extent Europe, depreciation in the value of the currency. The pound has devalued by about 16% since the Brexit referendum in 2016. This indicates a lack of confidence in the UK economy outside the single market, and actually costs have been rising for export firms because of the new trade arrangements. So the pound has been under pressure. And the reason that this is a problem is that when the pound falls in value, it's more expensive to buy imports. So actually, rather interestingly, the price of oil was higher in 2009, but petrol was cheaper. But what's happened is that the devaluation means that the price we pay at the pumps in the UK has increased quite a bit. The euro has also been depreciating because of concerns about Russia cutting off the gas supply, and this would really damage the European economy. So this is causing a depreciation of the value of the euro. They will put upward pressure on European imports as well. The dollar is quite strong, so United States should benefit from that in the coming months with a lower price of imports for American consumers. So good news for Americans. But Brexit is a drag on living standards because we've had a lower growth and output is less than potential and a lot of lost tax revenues as the OBR forecast. Another long-term factor in the cost of living crisis is the housing market, and this is very acute in the UK, but it's also a problem around the world. Since the financial crisis, house prices have continued to rise quite significantly because of a fundamental shortage of supply and also the era of very low interest rates. Low interest rates make it cheap to get a mortgage, so investors are buying to let. But the boom in demand for housing and the comparative shortage of supply has meant prices have gone up. This has put up house prices, but also renting. And the average cost of renting in England has gone up by about 40% in the past couple of decades. And the average rental property now costs about £1,000 a month, and in London it's more like 1,600. So that's a big share of workers' disposable income. So even if you have a reasonably well-paying job, you might lose about 40% of your income on rent, and then you have all the transport costs and energy prices. And that's another big problem with the cost of living crisis at the moment, is it's not just oil prices that are going up, but also gas and electricity, mainly caused by the Russian invasion of Ukraine. Unfortunately, Europe is very dependent upon Russia for a lot of its fossil fuel imports, like gas, and gas is used to generate electricity. So with higher prices of gas, we're seeing higher price to heat our homes or put on the AC as you might do today. And unfortunately, this is really likely to get a lot worse this winter. And in the UK, energy bills are forecast to double to really mouth-watering figures like £3,000 a year, up from £1,500. So that'll be a huge shock for many people, not just those on the lowest incomes, but even people with a fairly decent income. It'll be a big share of their income going for essentials. But one thing that may cause house prices to fall is actually another thing that will affect our cost of living, and that is interest rates. Because inflation is 9% and well above the expectations of many central banks, interest rates are starting to rise. And although in the UK they're still quite low, about 1.5%, they're forecast to keep rising over the next few months. And the problem is we've got accustomed to having low interest rates, and so we're accustomed to borrowing cheaply and accustomed to having a low mortgage. But when interest rates rise, this unfortunately will come quite a shock to many borrowers, and borrowing costs will rise and mortgage payments will have to increase. So this will be a further cost of living problem, especially for borrowers. It's also worth bearing in mind that when we talk about the cost of living crisis, it definitely affects some people a lot more than others, because the lowest 10% income decile, the poorest 10%, about 90% of their income is on what's called essentials, so food, energy, rent. And it's these goods and services that are increasing the most. Energy prices have actually been rising above inflation, and so has food prices. So when the price of these essentials rises, there's very little room for manoeuvre. And this is why we see people having to make the choice between heating and eating. And it's quite an unfortunate situation. Is there any good news on the cost of living crisis? Well, although inflation is forecast to continue to rise, there are some pressures which will bring inflation down, hopefully at least next year or later in the year. Firstly, oil prices have started to go into reverse. And although there's still a lot of uncertainty over geopolitics and there could be more upward pressures in the future, oil prices do have a habit of rising to great fanfare, but then quietly falling later when people don't notice so much. And the price of oil is very volatile. And if the world economy slows down, which may well happen, partly because of the cost of living crisis, then you will see lower demand, and this will help prices fall further. And the second thing is that higher interest rates and the cost of living crisis will lead to lower economic growth, and the interest rate rises will start to bring down inflation. Now the problem is that this kind of solves one problem by creating another. Slower growth will bring inflation down slowly, but the problem is it will bring other problems, such as maybe poor job growth, rising unemployment, even recession. And so we could end up with the worst of both worlds, a recession but still some high inflation. One good thing about inflation is it inflates the government's tax revenues, because when prices go up, people pay more VAT, more income tax automatically. And so the government revenues are actually doing quite well from the inflation effects, a lot of other long-term problems to government finances. But in the UK, you are likely to see some tax cuts just before the election because, well, firstly, the Conservative candidates are promising that, but also there is some degree of room for manoeuvre because of the inflationary boost to revenues. Although I could add that the Institute for Fiscal Studies recently stated that there's no good case for tax cuts because there's a need to spend on public services and improve the public finances. And the OBR recently forecast national debt in the UK could rise to 350% of GDP in 50 years. So there's still concerns on that front too. The final point I would make is that a lot of the cost of living crisis in the long term stems from this poor rate of economic growth. In the post-war period, we got used to a period of rising GDP, and it created a good dynamic for the government because they could get higher tax revenue without having to put taxes up. But the slowdown in growth plus the ageing population is giving the government a lot of headaches because tax revenues are falling or not increasing by as much as they would like, but they're having to spend more on healthcare. So this is why the tax burden as a share of GDP has risen to one of the highest for a long time. And this, of course, affects our cost of living. We're paying high taxes. Tax thresholds have been frozen, so more people are paying income tax. But at the same time, there isn't a feeling like we're getting better public services. Public sector pay is still very low. There's a shortage of spending on the NHS, long waiting lists. So we're getting the worst of both worlds. We're having to pay more tax, but we're not getting better public services. And this reflects some of the demographic effects of an aging population and worse health quality, partly because of COVID. So just to summarize, it's a real cost of living crisis because many factors have combined to put pressure on people's living standards. Inflation is high since the end of COVID, and this was made much worse by the Russian invasion of Ukraine, which pushed up oil and gas prices and also food and electricity prices. And at the same time as the high inflation, wages are not keeping up, and we're seeing, unfortunately, many workers really struggling, even those with jobs. Hope you enjoyed this video, and feel free to leave comments. Interested to hear what you have to say, And if you have any questions on economics, feel free to ask. Thank you. Bye.